What's going on, guys? It's Min with What's a Mortgage. Welcome to our channel. The goal of our channel is to educate, empower, and to connect you with the right mortgage. Sorry, we were running a little late. Hopefully, thank you for waiting patient. Hopefully, you guys are waiting patiently. Thank you guys so much for waiting. Guys, tonight we are going to talk about phase 5 of home ownership. If you already missed phase 1, 2, 3, and 4, go ahead and check it out on our YouTube channel. Don't forget phase 1, how to find the right lender, getting pre-approved. Phase 2, finding the right realtor, making sure they're going to help you find your dream home. Phase 3, the home search. Phase 4, the approval. And this is phase 5, the funding phase. So if you made it to phase 5, that means we're in a place right now where you're about to enter near the end of the finish line. You see the white checkered flag, right? First, there's a couple things you got to do before we cross that flag, and tonight we're going to talk about that, all right? Phase 5 of home ownership, the funding phase, the fun phase. This phase, when a lot of people get in this phase and they think the race is over, but it's not over yet. So tonight we are going to go over the details, the step-by-step things you got to do to make sure you cross that funding phase. As some of you guys ask me over and over again, you always talk about the loan estimate. When are you going to talk about the closing disclosure? So tonight, we are going to break down the closing disclosure for you, okay? We're going to talk about in phase 5, there is the locking phase, the locking step, the CD, the closing disclosure, which a lot of you guys want to know about, the loan docs and escrow docs, the final walkthrough, transferring the funds, and last but not least, funding the loan, recording, and getting your keys. All right, so let's get into it. So let's talk about the locking phase. So locking the loan. Remember, when you lock the loan, so if you haven't locked your loan yet, right, there's other steps to locking your loan. So you can lock your loan once your offer gets accepted. If you're buying new construction, of course, you can lock it a little bit earlier. But if you're not buying new construction, once you get your offer accepted, you can lock your loan at any time. Some people wait till the tail end to lock the loan. Why is that? Depending on how long the lock is, right? Some people might want a shorter lock so they can get a better deal. So if you lock your loan for 15 days, of course, the rate is better if you lock it for 30 days than 45 days. But if you wait till 15 days to lock it, you don't know where rates are going to be, right? Sometimes you want to talk to your lender and go, hey, have you locked my loan yet? Sometimes they did, sometimes they didn't. You want to make sure if they haven't locked it, of course, before docs go out, they gotta lock your loan. A lot of times the reason why they don't lock your loan is because this is where the negotiation begins. What do we do? All right, so right now, before they lock your loan, escrow sends them an updated HUD, an updated receipt, right? When they send an updated receipt, there's something called the cash to close, right? So when the cash to close comes out, some consumers are short money. So if you're short money, you might have to increase the rate to get the rest of the closing costs. Like I said, sometimes a lender, they approve you based on their opinion, but when an underwriter looks at it, they validate the assets they can use. If you have large deposits and they can't use specific assets, you'd either have to get a gift or change the rate to lock the loan, right? You have to change the rate before you lock the loan because your cash to close might be short. So definitely in this position, before you lock your loan, if your cash to close is short, they'll adjust the rate. If they adjust the rate and it changes from the initial loan estimate, there has to be a 3-day cooling period, right? Something called a change of circumstance. We'll go over that in just a second, right? So if any changes happen, before you go to docs, before you can get in this funding phase, is that lock phase where you negotiate. Next part, discount point. Let's say you haven't locked your loan and that you're at the tail end of the funding, phase 5, right? What happens if rates skyrocketed, but you wanted a specific rate or you need a specific rate to keep your debt to income ratio low for you to fund your loan, right? You might have to pay a discount point. You might have to pay an origination. Remember I said in my other videos, I don't recommend you pay an origination. I don't recommend you pay a discount unless you're doing down payment assistance. Or if your loan officer took you to the end and didn't lock your loan and all of a sudden rates are up and you might have to get a discount point to get a specific rate. Some people at the end, once their loan clears, their debt to income ratio might be a little higher. Their VOE came in, their income got short, or some debt just showed up on their credit. Sometimes you might have to buy a discount point to buy down the rate to qualify. We never want to go through that. That's why you got to do everything ahead of time. But of course, these things do pop up a lot at docs and funding, right? That's why I want to go over that right now. Next, the lender credit. When you're locking your loan, you want to start going over lender credit. Is the lender credit what the lender gave you when you started escrow? If it's not, it might change, or rates might have gotten better and you might get a bigger lender credit, or you're able to get a lower rate. So at this part, right, at this part of the phase 5, right, the locking phase, it's very intricate. You finalize the numbers because when docs go out, they will go out. So you want to make sure your loan is locked. Your cash to close, you have enough to come in. If not, you might have to get a lender credit, right? Or pay a discount point to get the rate down. So this is where I feel like a lot of consumers get disappointed, or they get kind of like, what, really? Right? You're spending thousands and thousands of dollars, and all of a sudden at the end, all these surprises. And that's the reason why I'm talking about it right now, because these are surprises a lot of lenders do not want to bring up, right? And of course, when these surprises come up and it wasn't part of the original loan estimate, then there's something called a change of circumstance. When you do a change of circumstance, you must leave at least 3 business days for it to cool off. So if you're in a tight situation where where closing is like right there, you might not have room for a change of circumstance. Or if you do have a change of circumstance, it might eat up days. So definitely in phase 5 of homeownership, in the funding phase, remember, once your loan clears for docs, it's the locking time. When you lock, you want to ask your lender, hey, do I have enough cash to close, or am I short? The reason why you want to ask that up front, you might be able to get a gift or ask for a seller credit or do something before you lock the loan so you don't have to take a higher rate, right? Ask your lender, hey, when you lock my loan, are rates better now or is it worse now than when you sent me the loan estimate? Why is that? You might pay a discount, you might pay an origination, or you might lose some lender credit. And if all that changes, if your loan was not locked, which people are, well, everyone locks their loan. I promise you guys, I wish everyone locked their loan. But a lot of times people don't lock their loans. And what they don't, and they want a specific rate now, or they want a specific credit, right, because they're short to close, they'll need to do a change of circumstance. So remember, you're almost there. Like I said, you're excited, but be aware of these issues that can arise in phase 5 of homeownership, the locking phase. Okay, here's the next one. Closing disclosure. Let's go over this closing disclosure. So the closing disclosure is kind of like the loan estimate. The closing disclosure is the final, almost the final receipt. It's pretty much 90% accurate. So when the lender sends out a closing disclosure, it gives you time to review it, right? A lot of times what happened in the early 2007, 2008, there was a lot of bait and switch. Because of the bait and switch, they came up with the closing disclosure. It's the breakdown of the fees that compares the difference between a loan estimate and a closing disclosure. You can see the difference of fees, right? So when the closing disclosure goes up, that's when you are pretty excited. You're 90% done. Yes, there are instances when I've seen closing disclosures go out, CDs go out, and the loans don't dock and fund. But 90% of the time, if the CD goes out, you're ready to rock and roll. So that's why if you talk to escrow or any lender or any realtor, right, they will say the way to prove that that loan officer is really clearing the files for docs, they'll go, when are you sending out the CD? When are you sending out the CD? That's a number one question you want to ask, right? If you're 15 or if you're 20, 25 days into the process, hey, when is the closing disclosure goes out? When is the closing disclosure coming out, right? You want to ask that. If you ask that, you're going to be like, what? Who are you? Who'd you talk to? Tell them you talked to What's a Mortgage, right? So the CD and the loan estimate, right? The difference, like I said, the CD is the final. The loan estimate was just an estimate. In between, remember, there could be a change of circumstance if you lock and the rate changes by more than an eighth compared to the loan estimate, right? If your fees change, anything like that, there will be a change of circumstance. If you went from a 30-year fix to a 15-year fix, if you make any changes, right, any drastic changes, there will be a change of circumstance. Let's go over the loan, the closing disclosure, okay? So if you haven't gone to docs yet, or you haven't gotten your loan approved yet, you have not seen a closing disclosure, but you should know what a closing disclosure looks like, okay? And if you are going to docs and you don't understand your closing disclosure, guess what? You get to see it today, okay? So here is the closing disclosure. So here we go with this closing disclosure, okay? This was an example. The loan amount, the interest rate, that is the final principal and interest, right? So this is your principal and interest. This is your final, right? This is going to be your final mortgage payment, the principal and interest. The next portion right here, we're going to look at right there is the principal and interest payment. So this is your final principal and interest, hazard insurance, property taxes, and PMI payment. Okay. So of course it can be different from the loan estimate. You want to take your loan estimate and compare and see what was the difference. If there's a difference in payment, you are going to see right here in the interest rate. If the interest rate changed from your loan estimate to your closing disclosure, if your PMI payment changed, you would see it here in mortgage insurance, and then you would see in your tax insurance. A lot of times, what happens is a loan officer can estimate property taxes, but when you go into escrow and your city has a different specific tax rate, that can change your payment. Doesn't mean the lender did anything funky. Somebody's like, oh my God, the lender's trying to take advantage of me. Yes, there are most likely, most of the times they do. But when it comes to your mortgage payment, most likely the change is in the property taxes. So don't go crazy unless the principal and interest change. If the property tax and hazard insurance change, it's not a big deal because the lender will just give you an estimate. So right there, guys, we have the closing cost and cash to close in your closing disclosure. That closing cost right there, that $97.12, that is the rest of your money you got to bring in. That's your closing cost, your actual closing cost. The cash to close is the rest of your money from your down payment minus your deposit plus your closing costs. So when you get this CD, before you go out and sign loan docs, you're going to see this. So you kind of know it's about 95% right on what you got to bring in to close. So when you see these numbers, the first thing I want you to do, I want you to go back to your account and find out, hey, make sure you have enough money. You know what's crazy sometimes? It blows my mind when the CD goes out and people look and see that CD and the lender doesn't check it either, right? Because think about this. You send your lender your bank statement. They don't know if you have any other activities in between. Of course, rule of thumb, you shouldn't be pulling money in and out of your bank account. But I've seen it happen so many times. This closing, like I said, you're at the end, you're at funding. The closing disclosure goes out. You see how much you need, and what do? Oh, I'm short $1,000. I'm short $4,000. And you go to your other account that the lender's never seen, right? Or you dig up that ditch in your backyard and you pull out $4,000 and you deposit in your bank account, and all of a sudden you wire the money and you don't say anything to the lender. Happens all the time. And when they ask for that transaction history, and they whoa, I've seen deals die, postpone, or sellers cancel because of that. So when you get your closing disclosure and you see your cash to close and that money's not in your bank account, do not go wiring money. Call your lender. Ring, ring, ring. I see that $14,000, but I spent some of it. All right, the lender needs to take some step back, rethink how do we package it correctly. Okay, so that right there is really important when it comes to the closing disclosure, because I see people either are short to close, right? Now they have to change the interest rate to cover the rest. Oh, I don't have this amount of money, or I let so-and-so borrow. Oh, I use so and such to go to the grocery store, and you wire some money in, and it kills the deal. All right, guys, so remember, when you see that closing disclosure and you look at page 1, the cash to close, you want to make sure you have those funds in your account that the lender has validated. If they haven't validated an account, do not wire money from it. All right, guys? So that's page 1. All right, so the next part, right? The closing disclosure. This is where you'll see the underwriting fee, the application fee. You see that origination charge of $405. I do not believe in origination, but if it's only a couple $100 for you to get that better deal, it might be worth it. But when it starts hitting the thousands, I think it's a bad look, especially on your first home. Most likely you'll move out of it one more time. When should you pay origination? When should you pay discount? If you do down payment assistance, you'll probably pay an origination. But on Wednesday, I'm going to be going over breaking down the loan estimate in. But I'm going to go over strategies, how to sniff out bad deals, how to understand if you should pay discounts or not. All right, so don't forget to check out next Wednesday. But let's continue on with this one. So So fees right here, $1,800, right? So section A right here, it's all in the lender's hand, right? Make sure these fees from the loan estimate do not change. Do you have to pull up the loan estimate? No, and I'll show you in just a second, right? So right here, there's 1802. When you look at these CDs, I feel when it's more than $2,000, something ain't adding up unless there's a lender credit, right? Depending if you get a loan from a broker, they might have to charge it and then do a lender credit. It's weird how they work, right? But yeah, $1,800, safe harbor, right? The next fees right here, right? We got the third-party fees. Well, why are there third-party fees? These are fees third-party companies charge these mortgage lenders, right? And by law, they can't increase the fees. They have to charge you the exact amount that these third-party charges, right? The appraisal, okay? The credit report, right? The reason why the appraisal's not there because they paid out of pocket. They should be on there, but shown paid, but it's not on there, right? So I'm assuming this is a refinance, probably no appraisal required, right? Right there, the flood cert, tax, the servicer borrowers dictate, right? This is title and escrow. Section C is title and escrow fee, all right? It gives you a total right here. These are tax, right? These are county fees, right? Your prepaid. What are your prepaids? Your prepaid is 1 year of hazard insurance up front, right? Also, it includes your daily interest. If right here, if you fund on the 25th, you would have 5 or 6 days of interest left. If you fund on the 1st, you got 29 to 30 days of interest left. It's prorated, just like rent, right? And then your other taxes and insurance right here, your HOA, that gives you a total. Section J, see there's no lender credit. Typically, you see an origination and you don't see a lender credit. That means they're over. If you see an origination and you don't see a lender credit, they're overcharging you, right? You shouldn't be buying down points unless you were doing your second or your third home and you're using equity to get a lower rate, but I recommend you do not get it down, all right? So that right there is page 2 of the closing disclosure. Let's go to page 3. Here's where you can compare, right? The loan estimate right here was $8,054. The final's $97. Oh, they raised $1,700. Why is that? Oh my gosh, right? The total closing costs, right? The down payment was 18 grand, right? There was a deposit of 10,000. The cash at close was 16,000. All right, 16,000. When you look at the final, it's 9,712. So it's about $1,700 more. You see, there was a credit right here. There was a credit right there, and then there's the same thing. The down payment 18,000 minus 10. Look at the seller credit. There was a credit of $2,500, right? So I'm assuming when they bought this house, the seller agreed to credit $2,500. Even though the fees were higher, the lender credit. That's why the seller credit. That's why you see it on there. And then there's another credit for $1,035. Why is there another credit for $1,035? And we'll break it down. So that adjusted and other credits people don't talk about. But I'm gonna talk about it today. So we understand the closing disclosure so far. If you understand it, guys, if I brought you value, do me a favor, hit the heart sign, right, guys? Also, if I brought you value tonight, do me a favor, subscribe. So you subscribe so you are notified every time we go live or post new content, all right? Oh, all 9 people on YouTube, please subscribe if you're not subscribing, right? And Facebook, loyal fans, love you guys, right? Turn the notification on so you're notified every time we go live. For here, another breakdown. But remember I talked about that $1,035. If you look in section L, see this rebate from title $750 and this other taxing for $365, that adds up to our $1,035. What is that? So if you buy a house, right, and the current homeowner has already prepaid their taxes or prepaid their HOA, right, then you're going to pay them the difference, right? But if they haven't yet, they're going to credit you because you're going to the house, but they're crediting you what you're going to pay, what they owed and they haven't paid yet. Let's say July 1st, right? Let's say taxes are due in November. Okay, if taxes are due in November and they close escrow right now in the month of November and they haven't paid the taxes yet, but they lived there up until November, right? They got to give you a credit because you're going to have to pay for it. But if they already paid in advance and it's November, you might have to pay them 1 month. All right. So that's what that number is right there. So pretty much that's the closing disclosure that you really got to focus on, right? So here also it gives you details about the loan. This is one section people don't focus on right here. The escrow, right? If you want to know how much you're going to pay in taxes, this is where it's in property taxes, in impounds. This is where it's at. It's on page 4 of the loan estimate. All right. So not of the closing disclosure. I keep getting mixed up of the closing disclosure. If you want to know how much your taxes are and you want a deep breakdown of your impounds, look on page 4 of the closing disclosure. Now that we've gone through the locking, you know what hiccups to look at. You went through the closing disclosure. The next step in phase 5 is the loan docs. So now that we've locked the loan, you read your closing disclosure. If there was a change of circumstance, all that is done. The next step is your loan docs, right? People ask, what happens next, right? Once the closing disclosure goes out, the 3 days pass, your loan docs go out. You're going to get 2 sets of docs. You're going to get loan docs from the lender, and then you're going to get docs from escrow. There's 2 sets of docs. And in these docs, the 2 most important forms is the note, which tells you the rate, and the grand deed, who's going to be on title. If you are married and you're in a community state, in the grand deed, you will see your spouse's name on there, right? If they're not going to be on the loan, they're still going to be on the grand deed, okay? So, but of course, you're not in a community state, that might not show up. The note will tell you what the rate is, the effective rate, not the APR, the rate of the loan. If it's a 30-year fix, if it's a balloon, it'll all be there in the note rate, okay? So your docs go out. There's 2 sets, okay? There's loan docs from lender, and there's escrow docs from escrow, right? And then there's the notary, okay? Once the note in the grand deed is out with all the loan docs and escrow docs, you have a notary, okay? So when docs go out, you can sign 2 ways. You can go to escrow and sign it. There will be a notary there. I like that option the most. The reason why I like it the most is because if there's any correction that needs to happen, they're right there. Also, they're a third party. Remember, escrow is third party neutral. They're going to break down and explain it to you. They sign loan docs all day long. I don't recommend you somebody who's a notary that works at a bank that might be a $50 notary that doesn't understand loan docs. Escrow notaries understand loan docs in case you have questions. That's the first way you can sign it. Second way, they can send a notary out to you. If you have a notary you want to use, they have to be approved by the title company, but they must have E&O insurance. A lot of times I run into issues where, they want to use their own notary because it's free or it's cheaper. A notary is between $175 to $250. $250, they come out to you. Yes, they can be higher charges if the location is far, or they have to sign one borrower one place, another borrower at another place, right? And it's 2 separate notaries. They might charge you more. All right, so the loan docs go out. You got the note. You got the grand deed. You got the notary. The next is the wiring instructions. Pay attention to the wiring instruction. Why is it important to pay attention to the wiring instructions? Where do you send the money? There's so much wire fraud out there, right? When you sign the loan docs, look for the copy of the wiring instructions, right? That's why I'd rather sign at escrow, because you get the wiring instructions. You get the amount, and this amount is incorrect, that's not matching the closing disclosure, you can go ahead and call the lender at the spot or talk to escrow. Why aren't the fees matching my closing disclosure? What changed? Did the lender fee change? Did title change? Did escrow change? Did something else change? You can see right there. That's why I would prefer you sign at escrow, okay? So the wire instruction tells you where to send the money, right? You want to make sure you send it to the exact account they give you, all right? So once you lock the loan, right? Once you read the closing disclosure, once the loan docs go out, right? The next step, the final walkthrough. You sign your paperwork, you do your final walkthrough, right? You do your final walkthrough, make sure nothing is wrong with the property. Nothing got added on that you missed, right? You do your final walkthrough. Once you do your final walkthrough, you transfer the funds. Make sure you transfer the funds that's on the wiring instruction, right? If you don't transfer the funds, they can't fund your loan. Like I said, no matter what disclosure you sign, no matter what promises you make, if you don't transfer the fund, there is no deal. If you don't transfer the funds, you can back out anytime. You might lose your deposit because you release your contingency, but like I said, no matter what you sign, there's no promise to the lender. There's no promise to the realtor. You might lose your deposit because you're that deep in, but if you don't transfer the fund, there is no deal. So make sure you transfer the fund. And this portion is very important. And I see it happen often. You want to make sure you transfer the funds from an account that has been validated by the lender. I've seen so many people, because they were short funds when they saw the closing disclosure, change bank accounts at the end and actually wire the money to escrow. And now they can't reverse the fee. They can't reverse it that easy. And now you're dragging on the escrow. You pass your due date. You know the seller can cancel anytime. They can't take that money, but they can take your deposit. So when you get to transferring funds, number one, make sure you have that money in that account when you see the CD without transferring in additional funds that they cannot validate. Number two, make sure you have the wiring instruction paperwork, make to wire it to the right place. Number three, make sure you use the account that the lender has seen, all right? And then you transfer the funds over. Of course, the last step of phase 5, the loan funds. So you wire your money, depending if they table fund. If they table fund, it funds same day. If not, it's going to fund the next day or the day after, but the loan funds. And you get excited, the loan funds, I got my house. Yes, you're like 99% done. But remember, the loan must record for you to get the keys. If you fund on a Friday and it doesn't record, do not call all your cousins to help you move, right? You got to make sure that thing records. If it doesn't record, you won't get the keys. I've seen so many loans actually unfund before. So when the loan funds, you want to make sure you do special recording if it's on a Friday. Why do I say that? Happens all the time. The loan funds on a Friday, you call all your friends and family to help you move, and you have the moving truck, everyone's ready to rock and roll, but they cannot give you the keys until it records. I've seen incidents where it funds. The realtor, no way this deal's gonna die. They give them the keys and the loan unfunds. So you moved into the house already. The seller moved out. And now for some reason, there's some issues and they had to unfund the loan. It happens pretty often, guys. So remember, these are the steps of phase 5, the funding phase. Hopefully you understand the funding phase. You understand the hiccups of locking your loan, making sure you have the cash to close, what happens if the numbers are off, right? We talked about the closing disclosure, how to make sure where to see the final mortgage payment, where to look for the closing costs, where to look for your escrow, your tax insurance payment, right? We talked about the loan docs, how to sign the loan docs, how to wire the money, and how to make sure you don't got egg on your face to make sure that loan records, all right? So that there, guys, are the 5 phases of home ownership, right? Phase 1, finding the right lender, getting approved, shopping for the best deal. If you missed that, check it out on our YouTube channel, right? Step 2, finding the right realtor, how to interview them, ask them the right question, having the right strategy to find your dream home. Step 3, the house hunting phase, understanding contracts, different strategies to find different properties, depending on what market we're in. Phase 4, the approval phase, the initial approval, conditional approval, clearing your conditions. Remember, if you do everything right at phase 1, right, the qualification phase, if they do that underwritten approval, phase 4 will be a cakewalk. Just make sure you don't have declining income or unsourced money, and you can get through phase 4. And then phase 5, the funding phase. You go to lock, doc, fund, record. Lock, doc, fund, record. All right, guys, that right there is the 5 phase of home ownership. If you have a loan estimate and you want me to review it, lately I've been getting loan estimates like crazy. So if you have a loan estimate, send it through, right? Send through your loan estimates. If you want us to review it, if you want us to beat it. Today, actually, there was a lot of good loan estimates, a lot of lenders out there providing really good rates, right? But they were feeling like, woo, it was hot, right? Don't forget, this Wednesday, we're going to go over the loan estimate again. But I'm going to go over with you how to sniff out a bad deal. When should you pay origination or discount besides down payment assistance? What's a par interest rate, right? Lender credit. What is a lender credit? Should you get lender credit or should you not get lender credit, right? We are going to break down the loan estimate for you to have the power and the power. I feel like it's a video, like Marvel action, for you to have the power, right? For you to have the knowledge so you have the power so no one hustles you, so you can make the best decision for you and your family, right? Let's go to the Q&A here. Again, thank you so much for watching our show. If you have any challenges or concerns regarding what's a mortgage, call me 714-332-2526.